Hi! In this video, I want to show you one of the strategies that really gives you an understanding of the market, without guessing or chaos. Today we'll break down the Alligator Indicator, what it means, when it's sleeping, when it wakes up, and how to use it to find entry points that professionals see. I'll show everything directly on a live chart, step by step. My main goal is not just to give you an up-down button, but to help you understand the mechanics, so you can apply them on your own right after the video, trade long-term and achieve solid profits. This is very important to me. My name is Elin Trader. I trade every day and run a Telegram channel, where I share trades, breakdowns and education. If you want to see this not once a week, but regularly, the link to my Telegram channel is in the description and the pinned comment. Now let's move on to the strategy. So, what is the alligator? Simply put, it's an indicator consisting of 3 lines. Let's turn it on now to show everything clearly. The blue line is often called the jaw, it's the slow line. The red line is the tears, the medium line. The green line is the lips, the fast line. I'll explain it as simply as possible. When the lines are intertwined, the market is chaotic and it's not advisable to enter. When the lines spread apart in one direction, the alligator wakes up. This means a trend is starting. If the lines point upward, it's an uptrend. If downward, it's a downward trend. When the lines start converging, the trend is weakening. The alligator is not a forecasting tool, it's a filter that shows where the market becomes clean and different from chaos. The alligator is an indicator we can use solo. It doesn't have to be paired with another indicator. As you've seen in another of my videos, I often use indicators in combination. I use the alligator solo, it's a mono indicator that tells us a lot on its own, but we always use it together with the technical analysis. Now let's look at different time frames. Here's the hourly time frame. There was a sharp downtrend. Now there's some leveling off, but the situation is still strongly bearish. On the 1 minute chart, you can see 2 consecutive bearish candles forming, and the alligator shows a downtrend. So we can open sell positions only. I'll still wait for the moment when the candle pulls slightly upward. Then I'll open a sell. They're opening, which shows a good entry point. There's a fairly strong bottom forming, and it's even moving lower with some pulsation. Since we entered with the trend and according to the alligator, I think the market will continue downward, which shows a very good entry point. There's a small reversal candle now, but I don't think it will have much strength. The pulsation is obvious. We entered with the trend, and the alligator also shows a sell trend. We simply caught the entry moment. There's some minor movement now, but again, we are not protected from mistakes or false breakouts. That's a market. It reacts to everything. So we continue to watch the situation. There's some leveling off, then a small breakout upwards. You see how the alligator lines start pulling upwards. And this shows that losing trades do happen. There was an upward breakout, so the first order closed in a loss. Now there's a hint of a reversal. The lines are leveling out and paired candles are forming. I'll open a buy, but I'll wait until the price dips a bit lower, then open a buy. Yes, I've entered with $200 now. Later I'll increase the amount. As I said, for now I'm entering to recover the previous loss in trade, and then using the martingale system I'll open an order twice as large to move straight into solid profit. But we do this consciously. Remember, no more than multiply by 2 and even better 1.5. For beginners, 1.5 is preferable. So what else can be said about this indicator? The lines show us direction, and if they intersect, they indicate a chaotic and dangerous market that we should not enter. As you can see, there are no intersection here. There was an upward breakout, which is why the first order closed and lost. I will break even and then open a larger position to exit with good profit. There, we close in profit. Now, using martingale, I'll increase the amount and open the next order. The lines are now turning upward. There's still no intersection, so we can enter a buy. We enter. It should move roughly to this level. You see, I marked it. I predict the market will reach this level and then possibly reverse lower and break the next level. The situation is currently holding in a mid-range, but we are entering with a trend. We chose a good moment, the intersection happened only later, we entered before it. That's why at this exact moment I wouldn't enter a trade. This is a hint for when to enter a trade. Technical analysis helps us define the trend itself. As you can see, indicators and technical analysis always work best together and give us stable profit. See how well the price moved upward? I think we'll close with a solid profit. Using martingale, we'll increase the amount, so in any case we're exiting the session, this reorder session, in profit. As you can see, everything worked perfectly. Now, here are the key points I want to highlight. First, don't enter a currency pair when the alligator lines intersect. This is exactly the moment when you should not trade. Second, trade with a trend. When all lines point in the same direction, you determine the trend using technical analysis across different time frames. This is the best entry moment. Even if there's volatility, remember, the direction remains the same, so the trend will close in profit. Now, I want to talk about how beginners work with the alligator and focus on common mistakes. The first mistake, trading when the alligator is sleeping and the lines are intertwined. As I've said before, I will repeat, you should not do this. It's a sign not to enter the pair. Next mistake, entering at the top of the candle without a pullback. Technical analysis and understanding when a pullback happens are essential. We are not protected from false breakouts, like the one in the first order where we took a loss, but then we recovered using the martingale system and exited with good profit. Another mistake is ignoring levels and candles. You must always mark levels. Review what you marked before, see how the situation has changed, and identify candle patterns that form. All of this is important. Analysis gives us stable profit. Another common mistake, risking too much and trying to recover losses aggressively. With martingale, if you lose, use 1.5 to no more. Don't risk your entire deposit and be disciplined about entering trades. My recommendation, 2-3% of your deposit per trade. Another common mistake is trading using only the indicator, expecting it to give signals by itself. Indicators must be used together with technical analysis. I constantly demonstrate this in my videos, and you can see that only a comprehensive approach brings profit. Remember, the alligator is a filter, not predictor. To summarize briefly, first, the alligator lines spread apart. This means a trend. Then we look for a pullback, wait for a confirmation candle as we did on the second and the third trades, enter with the trend. risk 1–2% and no reckless chasing. If you want more strategies, breakdowns and real trades, join my Telegram. I explain everything in simple terms, show my trades and analyze beginners' mistakes. The link is in the description and the pinned comment. Wishing everyone good trading and stable profits. Bye!